Hi, I'm Matthew, and welcome back to Profitero. I was thinking today, it's Monday. We want to talk about how to be smart with our money. So I came up with a list of smart ways to protect your wealth in uncertain times. And you've got to, just listening at the news and what's going on. These are uncertain times. It's time to really consider what you're doing with your money, how you're holding it, how you're structuring it, how are you keeping it safe, how are you growing your money, how does your money work for you. So just a few topics on that we'll cover today. First item is diversify your investments. You don't want all your investments to be in one bucket, in one particular fund, in one IRA, in one real estate investment. You don't want all your money tied up in just one asset class and one particular company. Spread your money across asset classes like stocks, bonds, real estate, and commodities to reduce your overall risk exposure. Now that helps protect your money. Of course, there will be times where one thing might perform really well, and you'll think, oh, well, I should move all my money into that. Well, the opposite can also be true. And if you have something with a lot of volatility and it's changing quite often, you could end up losing quite a bit of money if you are a late mover into that asset class and then a late mover moving out of that class. And so you end up paying much more than you should to get into it. And then you end up not making the money that you need to when you need to sell it. So diversify is number one best way to reduce your overall risks. And then consider international investments to mitigate domestic market volatility. So here in the U.S., we might have, we have a huge election. We might have some volatility as the transition to the VP or the president-elect Trump. So it's important to consider what other areas that you could actually hold your money in. And there isn't any reason to prevent yourself from going into international markets or pursuing international investments. You just have to be smart about it. Make sure that you understand exactly what you're getting into. Don't use this as the way to just learn about it. You want to start out with safe, small investments so that you get more familiar with it, and then teach yourself as you go. If you have questions about international investments or the different asset classes, please make a comment in the community here. We'll probably respond to you, and we'll all learn together. I, of course, am not a financial advisor. This is not financial advice. This is just for my own education and entertainment. The next step you want to do is build a strong cash reserve. And what I mean by that is having a very good savings account. So a lot of Americans, in fact, it's kind of a chronic problem with savings here in the U.S. Most Americans have less than $400 in savings and can't afford one week without their regular pay. And so there is this kind of living paycheck to paycheck mentality that is a pretty common experience for most Americans. And so it's important to build up a safety net or some kind of cash reserve so that you can actually carry over your bills and make sure that your family and yourself are going to be secure if there was ever a time where you had to go without your income. And so having an emergency fund, of course, starting out and having $400 would be a great start. But you ultimately want to have 3 to 6 months worth of cash to cover your expenses and unexpected costs without selling any of your investments and without having to lose any of the tax advantages of liquidating your investments. And some investments may be very hard to liquidate. If you have real estate, it might be very cyclical about the demand for real estate. So don't expect to tap into your investments in order to cover your bills if there was unexpected costs. You want to maintain liquidity on this so that you're prepared for any economic downturn or sudden expenses that might come up. And the number one expense that hurts most Americans and causes the most bankruptcies is medical expenses. So make sure that not only are you considering yourself about health insurance and how to stay healthy and that kind of thing, but you also want to make sure that you have a strong cash reserve in case something did come up that you had to really take care of and address immediately. The next is focus on low volatility investments. And there are people that make a life day trading, and they like volatility. They like that, entering when it's low, leaving when it's high. That sounds really great, and a lot of people focus on that or want to try to focus on that. But the steady Eddy is kind of the best way to guarantee and risk adverse investments. And that's really just to maintain your principal and make sure that it's growing constantly throughout time. And so you want to invest in sectors that tend to be more stable during downturns, like consumer staples, commodities, healthcare, and utilities. These things are, standard demand, regular demand. There are times where those fluctuate, but those are just much lower volatility overall when you're looking at stocks or investments. Consider high quality dividend paying stocks or ETFs for steady income during uncertain markets. And I'm planning on actually doing another video on just dividend investing and what that would look like, and especially how to use different stock trading apps in order to find the right investment for yourself. And then the next one is limit high risk investments. So you want to minimize your exposure to speculative assets that may have high volatility, like certain tech stocks or cryptocurrencies. And so, yes, of course, Bitcoin has gone up quite a bit since the election. There's going to be a huge move in tech, is what a lot of people are talking about. And I have seen in my own investments increases in both cryptocurrency and certain tech stocks. But these assets are marked by high volatility. And so if there were any supply chain disruptions or foreign policy trade issues that come up, that could certainly impact the overall stock value there. And you don't want to be over leveraged in a high volatility stock. So make sure that you limit your exposure to these types of things and concentrate on making sure that you have a steady, reliable, less volatile stock to have investments in. Another good idea is to invest in precious metals and commodities, and that would be considering gold, silver, and commodity-focused ETFs for steady income during uncertain times. So make sure that that you use that in order to continue moving forward with your principal intact. It's a hedge fund against inflation and currency fluctuations. So precious metals often hold value in times of economic stress, providing a layer of protection. And so it's always a good idea to consider having precious metals or commodities and commodity-focused ETFs as a backup plan or as a security blanket on your overall investments. And then reassess your real estate holdings. Consider investing in real estate or REITs as they provide cash flow and act as a hedge against inflation, but evaluate the property markets carefully as certain areas or types of properties may hold up better in economic downturns. So for example, areas that are very high in demand for tourism will have very good years, maybe a long series of good years. But if that area were to have any kind of catastrophic weather event, say, for example, Florida, there's many properties now that either don't make the HOA requirements in order to have a safe HOA, and now there's huge assessments that are going out to the HOA, the unit owners of those HOAs, that they'll have to pay in order to keep that HOA functioning and operating. And so there's all sorts of condos and townhomes and associations that are struggling in Florida because of the severity and the regularity of severe weather catastrophic events. And so there's probably going to be some opportunity in a few years to acquire these properties, but for the people that own those properties now, it's a struggle for sure. And so it's something you definitely want to be aware of when you're making a real estate investment. Is not to over leverage yourself into property that is really heavily dependent on tourism or any kind of temporary demand. Things like based in downtown areas are a good idea, based around large hospitals, large corporations, large university campuses. These are areas that are going to have a reliable, consistent, regular source of tenants that are looking for an opportunity to live. So if you just had a long-term rental in one of these areas, that would be safer than, say, a vacation cabin or a vacation property on the water, that kind of thing. So it's just something to be very careful of. And if you have questions about that, I can definitely look into that for you. So make sure to contact me. The next one is reduce debt and limit your new liabilities. You want to pay down high interest debt to free up cash flow and reduce your financial obligations in uncertain times. it's not a smart idea to use credit card debt in order to acquire an investment. And there's a lot of opportunity for people to get themselves in a really dangerous situation if they were to use the amount of credit that is extended by, not just investment banks. There's apps that extend credit. It's really leaning towards a gambling or a usury problem. So I would just be very hesitant to really acquire more debt at this time. You want to make sure you minimize your debt as quickly as possible, and use that debt once you pay off one credit card. Start taking the money that you would normally use to pay off that credit card and apply it to the next debt. And that way you accelerate the payoff of your debt, rather than, if you have two cards at $100, you pay off one, and instead of continuing to pay off the second one at $100, now put $200 on it until that one's paid off, and then you take the $200 and apply that to the next debt, and you'll see a rapid decline in your overall debt and an improvement in your credit score. So that's something I highly recommend. Avoid taking on new debt to keep your financial situation stable if economic conditions worsen. A lot of people aren't thinking about, if they max out their credit card debt, what's going to happen if they lose their job, if you get sick, or if something happens. All of a sudden you have that credit card debt to pay as well. And so it's something that you want to make sure that you don't put yourself in an even worse situation by using your debt to live off. Next one we have is review and update your insurance policies. Now, you want to ensure you're adequate for health, property, life insurance to protect your assets and family. A lot of people don't realize that life insurance is a very affordable benefit, and it's a strategic plan to make sure that your loved ones are cared for, that they have the means to make up for your income. If something like a devastating loss like that happened, even a small policy would go a long way to making sure that your family is safe and secure. So it's something that you want to be considering. Life insurance for sure, especially if you have dependents or other people that are relying on you and your income. But your property as well needs to be well insured, and that means don't use your insurance as a small incident for property coverage. You want to use your insurance wisely. And what I mean by that is that a lot of people who have $1,000 deductible on their home insurance, for example, might send in a claim that's only $3,000. Well, if your insurance company is paying a $3,000 claim, it's going to take them a long time to make money on you. Again, most insurance companies that do home insurance right now are struggling. And in fact, in Minnesota, there's several that actually have left the state and vacated the state because they're non-profitable. And that opens them up to vacate their entire book of business or be acquired by another carrier. And as an insurance agent, I've seen that actually happen. And those policyholders that are stuck with that carrier that is no longer operating in the state, they get cancellation notices, and those makes it even harder for them to find new home insurance to step in, especially if you have a claim history. And so you want to be careful about when and where you file your claims. And if you're thinking about filing a claim, you might want to talk to your agent. And if you can't get a hold of your agent, call me. I'll talk to you through your claim process, what you should expect, how that typically works, how long things take, and whether or not I would recommend if you file that claim. Typically, I generally suggest that if it's a catastrophic claim, that's what insurance is for. If it's a non-catastrophic claim, you really should be using your safety reserve, your cash reserve, in order to take care of that. And the reason why you want to do that is maintain the low price of your home insurance policies and make sure that other home insurance carriers are eager for your business. The more claims that you have, the frequency and severity of the claims that you have on your record as far as a homeowner's insurance carrier buyer, then the less likely other insurance carriers will even want to insure you. And you may find yourself in a place where you have to buy the most expensive insurance policy just to have any insurance on your home. So that's something that I've seen actually happen. And it's not a good position to be in. And for example, I have one customer, a church, that had two serious claims in 3 years. They were not able to get standard health or standard property insurance anymore after that. And we got them insurance, but it was probably 10 times what they were used to paying. And that was the only way that they could actually keep their church open and keep in operations. So it's something to really consider, as these things go on. You want to be very wise about how you utilize your insurance and how do you benefit from it, and what is the impact overall and overall long term with what you're doing with your insurance. And of course, everybody needs health insurance. So make sure that you are considering what your health insurance options are. When you review your health insurance annually from your employer, make sure you ask questions of your HR team. If you are a small business owner and you're looking to have group health insurance, by all means, let me know. I would be happy to help you with that. I know all the carriers that are available here in Minnesota and the surrounding states. I'm licensed in 17 states, so I'd be happy to help you find that and discuss it with you. Consider adding another line of insurance called umbrella or excess liability for your additional liability protection in case of unforeseen events on your home or auto. And what an umbrella does is literally it covers your home and auto under, and maybe your recreational vehicles or watercraft under an umbrella of excess liability insurance. And so if the underlying policy limits were exceeded, then this umbrella policy limit would kick in, and that would also help defray any liability against yourself. It would be more likely that the insurance carrier would fight that claim rather than just settle the claim with the person that was injured in that and was trying to pursue you for a loss. And it's the more that you have on excess liability, the more likely the carrier will defend you. And so I would love to talk to you about that. If you have any questions, make sure to put it in the comments or message me directly. Next is have a wealth preservation strategy. Work with a financial advisor. Again, I'm not one, but you want to create a plan focused on wealth preservation over aggressive growth during volatile periods. Now, I have a financial advisor. I highly recommend having a financial advisor. If you need a recommendation for one, if you're interested, I'd be happy to help you look for one. I know several that I can recommend you to. Also sets stop loss orders on investments where appropriate to prevent steep losses. Meaning if there is a suddenly drop in the value of the stock or an investment, that you have a stop loss order built into that so that you don't lose any money past a certain point. And that will preserve your overall principal. And finally, keep your skills and knowledge updated. Continuously educate yourself about financial strategies and market trends to stay prepared for changing economic conditions. And part of that is just listening to this video. But it also could be, joining other investment groups, using Meetup to meet other like-minded investors or to learn from them. You could also listen to podcasts, of course. There's going to be tons of that. And there's many websites dedicated to this too. So if you're not listening to at least one, you should probably have a rotation of 4 or 5 that you're constantly listening to, because you don't want to just use one guru's strategy. You want to hear from several different people and pick and choose what works best for you, what sounds about right, what are you willing to experience or try out. But finally, building financial literacy and staying informed about economic shifts can help you make smart, timely decisions. And that's what we're trying to do here on Mondays, is try to understand how the best to preserve our money and make our money work for us. And so with that, I'd like to ask for your subscription. Please like and share this video. Thanks.